Meeting of the Trustees of Trust Funds in Town of Merrimack. I'm Chris Christensen. Joined on my right by telephone this morning is Trustee Jack Balcom. On my left is
Good morning.
Trustee Bill Wilkes and Town Finance Director Tom Boland.
Good morning.
And I guess still Town Treasurer, is that right?
At the moment.
At the moment. So, first order of business is the minutes of May 23rd. They were distributed, and Jack had a question. He found one typo, a misspelling. I found another one, so we need a couple of typos fixed. And there was a question about the context of calling Bay State Forestry. I just said in the minutes, due to current markets. Is that sufficient, or do we need to expand on that?
No, I think we're fine.
Okay, so we don't need to have an amendment to fix typos. I'll do that. Do we have a motion?
I'll motion we accept the minutes.
I second it.
All in favor?
Aye.
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 Jack, thank you. All 3-0-0.
I read it, but I did not catch the typos.
Well, Jack caught one of them. And when I went through to fix the one that he gave me, I looked down the next line and flowers was misspelled as well, with a big red line underneath it from
Word,
software.
Word
Yeah.
software.
Give me just a second. Okay, next item of business is Capital Reserve Fund activity. We have a request from the town. Do you want to speak to that, Tom?
It's our normal annual request. We typically do this once a year. All the money that has been spent, which is earmarked to come out of the capital reserve funds. This year, the total is $1,845,277.50, broken up among, almost a dozen different funds. The detail, an itemized list of the transactions is provided here for you guys for your review. In addition, we have a file with all of the supporting invoices if anybody cares to look at anything or has any questions about anything.
Okay, thank you very much. I would point out that last year, the parallel amount was 2.47 million, I think. So we're spending a little bit less out of capital reserve funds this year, and presumably that will build up those reserves for future years.
Just a question on the ambulance equipment.
Mm-hmm.
It just says, it doesn't give you any detail as to what the item is. So the first item for $119,000, is that, what exactly is that?
Those were motorized stretchers that they had installed in the units, so that the firefighters no longer have to lift the patients up into the gurney, up into the ambulance. It's all mechanized now, so that it lifts them up hydraulically. So we had a number of instances of firefighters hurting themselves, wrecking their backs and various other body parts from that kind of lifting activities, and it was determined that this kind of thing would be well worth the expense.
Not cheap, huh?
They are not cheap. I mean, that was
Is that for like two or three?
I think it was four
4?
Yeah. So each of our ambulance units are outfitted now with those.
Well, on the other hand, if you put a guy out of service for 3 weeks with a bad back because he lifted somebody that was 400 pounds, there's a parallel expense there.
Right.
So, any other questions, anybody? Jack, can you hear all of that okay?
Oh, yeah, I did. I think that's a great idea.
Okay, any other comments on any of the other? Areas of reimbursement?
Not for my.
Okay. In that case, can we have a motion?
I move that we accept the capital reserve fund action.
I will second that.
All in favor?
Aye.
Aye.
300. Okay, you can relax for the weekend, Tom.
Thank you.
Also, under capital reserve funds, we expect some expenditures late in the summer from the MVD. Cambridge Trust has been advised on that, so they should be liquid to the extent necessary. We received this week a deposit from the school department, the school administration for $150,000 to go into the school repair fund. And I think that was actually voted on a year plus ago, would have been the 2020 meeting. And we're ending up that fiscal year now. Portfolio activity, we did receive and deposited $10,000 to the Barry Quimby Fund. If you got your bank statements this week, I didn't see yours in, Tom. Maybe you got them late yesterday afternoon?
I didn't look, but
Yeah.
I'll check.
We did get a separate statement for the Quimby Fund, so that's up and functional. Good time to start that prior to the fiscal year.
I got the statements, but I haven't opened them.
Yeah. Well, they only came yesterday,
Right.
so. Excuse me. Any other activity? We had a heads up from the library. They're gonna be expecting or asking for some money from the Carroll Patterson Lawrence Fund, be after July for fiscal year, the next fiscal year. But I put it on the agenda because there was a thought that we could have a motion to approve that in advance so that when the request comes in July, it could be paid without having to wait until the August meeting. Does anybody have any thoughts on that? I think it's about $3,000 they're looking for.
Oh, okay, that was my question. How much?
I mean, I'm okay with the motion to expend up to, I mean, I don't know how we can do this without knowing the exact number, but up to $3,000 or more than that? How should we do that?
Should we do up to 3,000? Is that
Well,
it?
let's just say for appropriate funds as requested by the library.
Okay.
I don't have a figure right now for how much is in that expendable portion of that fund, but it's considerably more.
It's more than that.
All right, motion by Bill, second by Jack, is that correct?
Yep.
All in favor?
Aye.
Aye.
300. All right, here comes the tough one. The investment policy. I don't know what you've got in front of you, Jack, for paperwork. I did give, or hand out, emailed out, some of the thoughts and other comments that came from
Yeah.
other towns, Durham, Amherst, Bow.
Well, yeah, I did have that concern, but that's an obvious concern. But I have no problem with the investment policy.
Well, we have to at least do two things. One is approve or act on the changes suggested by Cambridge Trust. There was some talk about changing the limit numbers at the end of the policy because they were going over 100%. There was a question about deleting the section related to the town treasurer, which we apparently don't really need in our policy. And in past years, not every year, but in past years, we've had questionnaires from the auditors about having a standard or a written ethics or conflict of interest statement in our policy. So there was one of those in one of the other towns. It seemed to be simple enough. It's only 2 sentences. And I thought we should consider adding that.
The other one that, the two things that I just, one I question and one I think, unless I missed it in the proposal, was the over concentration. I didn't see anything about an over concentration of securities, and I saw that in one of these other towns that specifically says no more than 10% of the portfolio cost basis shall be invested in the obligations of one entity. And I didn't see that in this unless I missed it. I think that's important that we don't have a.
Don't overbalance or overweight someplace.
Yeah, I mean, we don't want to have, too much of anything, and, I think 10% might be a good threshold. And that was one thing that I picked up on. The other thing is, and again, I'm not sure, but the Cambridge Trust proposal has this NASDAQ US Broad Dividend Achievers Index as a benchmark. I guess I always thought of the NASDAQ as not as much of a dividend type of group of securities as something different, like maybe the S&P 500 or something else. So I guess I need to be educated a little more on that, and I was interested to see what everybody else thought.
My thought was that the NASDAQ, as you mentioned, is not dividend-oriented as much as some of the other indices. But it certainly, if you use that as a benchmark for yields, makes you look good. I could be tempted to say we stick with the S&P 500 that we are currently looking at, but put in a statement that notes that the S&P 500 is not yield-oriented, and we are, so a balance needs to be considered in that comparison.
I mean, I think that to some extent what happened last year with Cambridge Trust, and obviously, they're an enterprise that probably has personnel turnover, somewhat regularly. People grow in their career or whatever, leave Cambridge Trust and maybe go somewhere else for a higher level job or whatever the case may be, I don't wanna see us get into the same situation we got into last year where I don't know how I say this diplomatically, but I feel like we just got somebody that was sitting at a desk and started trading things because it was exciting and not within the goals of our town and trustee organization.
Well, I understand that perspective. I think part of the reason we've been pushing and pushing to get something done on the investment policy was, it really wasn't clear what our goals were. And I think they were trying to react, or whoever was doing the trading, trying to react to some volatility in the market due to the pandemic. Whereas we're more content to sit and watch the pandemic go by with a much longer, broader horizon or perspective than somebody else might have. But I think we've had extra meetings with them, and I think we've straightened that out, so I'm not so worried about it.
I think we definitely
Yeah.
straightened it out, but I think if we're gonna have a policy, we need to have it in writing, because I don't wanna have somebody come back to us and say, well, you know, I was doing everything within the policy, you know, I was exceeding the NASDAQ US Broad Dividend Index.
Yep.
I'm not sure exactly what we need to plug into that. I guess I would have to think a little more about that, but maybe I need to be educated that the NASDAQ Broad Dividend Achievers Index is the right one, but
Well,
it's something that just popped out at me when I read this policy.
the other side of that is that we never put specific number goals in mind. We said, shoot for the index. And if you diversify broadly enough, you can pretty much match the index without a great deal of effort. But the upshot of the discussions we had was, excuse me, a specific yield goal. And out of those discussions, we've been using 3%, which I don't think is unreasonable. Of course, if we get a yield of 3% and then we pay them a management fee, the net is a little bit less.
But Chris, let's say the market has a substantial decline, and it's easier to get higher yields than 3%. So now you've given them the opportunity to say, well, I'm still meeting the 3% yield, when maybe they could have done better if they had, you know, if we had a substantial decline in yield or in the market, and of course, a lot of quality companies increase their dividends on a regular basis. So now maybe you can get 3.25% on average. I'm a little nervous about putting like just a number in there, because I want them to do the best. I want them to be prudent, number one, but I also want them to do the best they can to get the best yield possible, overall average yield at any given time.
As I look through the other towns, I noticed that most of them are, in their policy anyway, more heavily oriented to bonds than we are. And so they are overall expecting a much lower rate of return than what we've been able to achieve over the last 10, 12, 15 years. So I think sometimes, because we've been very successful over that last, let's just say 10 years, for a variety of reasons, both before and after hiring a professional advisor,
Well, I kind of agree. I think safety is very important.
Yeah, our success rate has been very good, but I don't want to put something in the policy that's going to push towards lofty goals that are unrealistic from a safety point of view.
I don't think that's what I'm saying. I'm saying that there's an inverse relationship between yield in underlying price, market price of a security. So if you had Exxon and it had a yield hypothetically at $60 of 3%, and it dropped to $40, and nothing's really changed in Exxon's business, maybe
But
this
your
is.
yield is now 3.5%.
Exactly. So, if you liked Exxon at 60, you might like it more at 40, and that would exceed the 3% threshold. But if you put 3% in here, does that give them the latitude to start drifting? I'm sensitive to the fact that they really drifted away from what our objectives were, and they started buying things that either didn't have yield or they had very, very low yields, because they were trendy, if you want to use that word. So I don't, I don't know how, if you want to have a number in there or just some words that says, I mean, we talked to them about the dividend aristocrats, which are typically, is it 30 stocks, 30 different companies in there?
Depends upon the ETF you buy, but yes.
But let's just say it's 30, and, those, if you go down that list, they're very high-quality companies. And if those 30 aristocrats see if the overall general market drops, and now you have new opportunities within those 30 aristocrats to maybe achieve a 3.25% yield, why wouldn't you go after it?
The counter thought is that, depending upon who you listen to, we're going to be having some inflation in the foreseeable future. Whether it's long-term or transitory, we don't know yet. You never know until you look backwards. But that will affect prices, and if prices go up faster than yields, then the yields drop. So I think we need to have some tolerance in there for fluctuation in yields, as well as we have tolerance for market value fluctuations. How we're going to phrase that, I'm not sure right now, but I'm happy to put in a goal and adjust it periodically. Any thoughts from your side, Tom?
I mean, I think it's all about choosing the right benchmark, and that's, I mean, Cambridge Trust is recommending this one. I don't honestly know too much about it. But picking a benchmark that is, dividend centric, I guess, or weighted towards dividend paying stocks probably makes some sense given what the goals are.
Okay, so let me suggest this. I want to kind of go through the sequence, and what I'm thinking is we'll get some ideas down today. I'll put them together into a draft that can be circulated. We can wordsmith it a little bit, and then we'll have something in August that we can approve. So my first thought is to say, as a group, and I'm just going to do this by consensus, we're not going to take a vote on everything. Do we want to continue with that first set of language related to the treasurer's duties, or should we drop it? Jack?
Okay, is that a motion, Chris, or what?
Nope, just looking for opinions and we'll see if we have a consensus.
Okay, I know when we start plugging in numbers there, we're never gonna get it exactly right. Our investment policy, is doing just what it's supposed to do.
I'm just
When we,
talking about the first page that relates to the town treasurer. Do we still need that? I think
Don't-
not,
Don't have an opinion on that.
okay? Do you think we should?
I don't have a strong opinion on it. I'm not sure it hurts us having it. I mean,
Well, let me rephrase that. Nobody else has it. Out of the ones I looked at, the towns I looked at. And we have a separate treasurer's policy that the town council approves every year. Is that relatively accurate, Tom?
It is. Yeah, I don't, just from my standpoint, I don't see the need to have that in this policy.
All right, so I'm gonna delete that in the draft.
Are you still looking for a motion, Chris?
No, motion will come in August.
Okay,
So I'm just gonna put all of this stuff together and get us a draft out next month, and we'll fine tune it for the August meeting.
okay.
it might make, I mean, again, it might make sense just to make a phone call to Cambridge Trust and say, why did you pick the NASDAQ dividend
I will do that.
index? And, you know, it's not something that, I don't hear, you know, that exact term, I haven't heard, I've been investing for a long time and looking at investments for a long time, and I don't even, unless that's a new term, I don't even remember hearing that term. It might be very common, but it's not something on my radar screen.
Okay. I will do that. The other question was, do we want to add in some conflict of interest
Okay.
language? It's not exactly investment, but this is a good place to put it.
I mean, that's fine. You know, I think goes without saying. I mean, we sign an oath or pledge to an oath that we're not gonna have a conflict of interest, but if it needs to be put in this, I don't think it
Well, for some
hurts.
reason, the auditors ask about it. So,
Right.
easier to put it in here than it is to carry around a separate piece of
We're
paper.
probably losing a page from getting rid of
Right.
Yeah.
that, so we can add a sentence.
The other,
But did you write down the over-concentration, or do you agree with that?
I was getting to that next.
Okay.
And I've seen some of them 5%, some of them 10%. I'm happy with 10%.
So the only,
I guess, oh, I'm
the only
sorry.
thing I would raise about that, I guess, is what about a small fund like the Quimby Fund or the Scholarship Fund? I know Cambridge Trust has been using some, I think, some ETF funds. How about funds that are already diversified themselves? Would that concentration still apply to that fund?
I think,
The language from the other towns made a provision for that.
Okay. Yeah, that was my only concern about that, was that it not restrict their ability to use those kind of already diversified funds for an investment on a,
I think one of them said single entity, so like, we don't wanna end up with Kodak in our portfolio circa 1995 or whatever.
Yeah,
I mean, everybody thought that was a blue chip company at the time,
it was at the time. It just didn't continue.
or Digital Equipment Corporation, or
Yep.
many others.
Yeah, Tom brings up a good point. You know, investing in something like Berkshire Hathaway, you know, it's a diversified equity, I guess.
That's a single entity though, and I know what you're saying, Jack, and I don't disagree that they're very highly diversified, but that's a single entity versus like an ETF that would have numerous entities in a particular fund.
Yeah, it's a difficult area.
If we put a single entity in there, that would preclude us from investing in Berkshire Hathaway for more than 10%.
Well, I think that,
That's
I
okay with
mean,
me.
our investment policy still allows us to do our job, which is quite correct when we reviewed their what Cambridge Trust was doing, and we saw that they weren't exactly on the mark, and we let them know about it, and that's what our job is. So I'm not really concerned.
Well, I'm concerned if they had more than 10% in one entity because of what I just said. Eastman Kodak or other companies that were highly respected companies that do not exist today. We don't want to have 25% in some similar entity, and then all of a sudden their technology is supplanted by something totally different, revolutionary, digital photography. I don't think we want to. I think we need.
Right, that's why we put in the limitation.
Right.
You okay with 10%?
Yeah, I guess so. I guess we could survive if something went away, but that's a high-end limit, don't you think?
Yeah, it's a little high. I
That's
think.
pretty much the number we used to use when we were managing the ABCD funds.
I know when things hit 10%, we would like say, hey, we might want to, sell some of XYZ to rebalance.
Yep.
Exactly, like we did for Apple.
Do you want to add in, this gets a little bit micromanaging in my book, but do you want to add in something that says on a quarterly or semi-annual basis?
Quarterly sounds good.
We don't have a lot of holdings that are hugely volatile, but I'm thinking we wouldn't buy Amazon for this portfolio because it doesn't pay a dividend,
Right.
among other things. But I know at some point in time, let's say 3 years ago, you could buy Amazon for less than $1,000. It's shot up, came back, shot up, and it's now at 3,200, 3,300, where it's been
Right.
stagnant for the last 6 or 8 months.
I try to say at least quarterly. But quarterly review can just be, a simple scan of what we've got and what we should have.
Quarterly, semi-annual, Bill.
I would.
We call them in anyway, semi-annually, so.
I think quarterly. I mean, if we're up against that threshold of 10% with any particular entity, I mean that needs to. People need to be watching that, obviously. But you could go to 12% within a quarter, and you could go down to 8% within a quarter. So
Yep.
that's quarterly might be too
short.
often, my opinion.
Okay. I'm gonna put down semi-annual for now.
I'm just concerned that, and maybe I'm being way overly sensitive, I just don't want to see them trading because you know, we give them the direction that they should be trading more than they need to be trading.
Well, I will say.
Because I'll go out on a limb and say that if they had done nothing pre-pandemic, through the whole pandemic period, we'd be in at least as good a shape or better shape if they had done nothing.
I respect that, and I haven't done the calculations, but you're probably right. Nonetheless, that's all water over the dam.
Yeah, it's like,
The other
that's like
question
Monday
I-
morning quarterbacking.
Where's my copy here? The other question that came up was in the back of our policy. We have some limits on percentage cash, percentage equities, percentage fixed income. That there was a thought about adjusting those. Does anybody have any preferences on that? I don't have the page. I can find the page
No.
probably.
Page 4.
In my print, it's probably page 24.
Yeah. Yeah, just to let you know, Chris, I have a hard stop at 10.
Okay. Well, have you got it right in front of you, Tom? Do you have,
I do, and I think the only issue we had, or that was raised, was the equity maximum percentage, which is listed at 90%, where we have a 15% minimum allocation to fixed income. That didn't seem to work. So I think if we change the equities maximum to 85%, at least the math still works, you know, assuming that you guys are comfortable with the ranges that are given.
I can see dropping that to even 80%. Right now, we're at about 65%. Plus 5% cash and 30% fixed income. In very round numbers, that fluctuates a little bit, but, so we're not even really approaching those numbers, and I'm not sure we ever would, but what do you think? Jack, you got a thought on that? You okay with 80%, 75, 85?
Well, yeah, I'll go along with the group.
Your thoughts, Bill?
I'm fine with 80% because I don't think we've ever approached that, have we?
Not that I'm aware of.
So it would be 20% fixed income minimum and 80% maximum for equities?
Well, it might be 5% cash.
Well, cash should be responsive to what kind of fluid payments we've got.
That kind of takes care of itself in the sense that if we need more cash for something, it's going to be short term, but we're going to reduce either equities or fixed income to generate the cash. If we're just generating dividends, they move over to the income column anyway, so we don't really have a problem. The only other thing that comes out of that is we should differentiate. I think in the Cambridge Trust draft, they mentioned current income as primary goal for the common principal fund, but didn't say anything about total return, or what I would have said, total return for the income fund. So I think we needed a parallel statement there for the income common fund as well. Are you okay with that? Generate something in that?
Sure,
Okay.
sure.
Yep, I'm okay.
Okay. Anything else anybody wants to address on the policy? Jack, you got anything else?
No,
Bill?
I'm ready
I'm
to
good.
move on.
Okay. Let me find my agenda here again.
Correspondence.
Yep. I have not heard anything back from Bay State Forestry. I haven't pushed it. One of the things that comes to mind is in order for us to do a harvest, we have to go to town meeting and do it. So it would be something in the fall to prepare a warrant article for town meeting. So there's no real rush on it.
Right.
The thing that triggered the conversation in my book was just the
Price
crazy lumber prices that we're hearing about now. And that may or may not change by the time we could get to town meeting and then get a harvest scheduled. So I don't think there's any rush on this. We weren't planning anything, but, and I understand that supplies are coming back and prices are leveling off or even coming down a little bit. So we'll keep an eye on it, I think is the point. Flower funds, we did get an invoice. It's been submitted for payment. Probably it'll go out today. Upcoming meetings, no July meeting. August 20th, at which point we'll be approving the MS9, MS10, and investment
Okay.
policy. And then September 17th will be our next regular meeting. Any other business? I did put down discussion about the municipal association training session.
Oh, yeah.
Any comments?
All the handouts are available. I don't know if you caught that or not. Actually sent out a additional email.
Yeah, I didn't see it at first. I don't have on my regular desktop a camera or microphone, so on the first session, I dialed in and listened by phone. I got some interesting ideas from Steve Buckley on record retention and other stuff that I need to go back and kind of flesh out. But then I couldn't log back in or find the telephone number for the afternoon session. I spent a lot of time trying to find it, trying to log in, but as far as I was concerned, that was just
I
wasted
had
time. I
similar,
never got anything out of it. And I wrote them an email and said so. So I don't know what Hoover is, but it didn't work for me. I have better luck with webinars. Did you get through to any of it, Bill?
I didn't see any of it.
Okay.
well, I think it was all the problem about hoorah.
Yep,
Yeah, it was very. I never got into that. I had to do the same thing as you, Chris.
okay.
That's why I requested all of the handout.
Backing up to the forestry thing? if
Yes.
we can. I wasn't there when you and Jack and the gentleman from the forestry company went out and looked at the forest. But wasn't there?
Tom was there too.
Tom was there, okay. Wasn't there suggestion like 2024 at the earliest, or something like that, 25? Or
That was my recollection, was that it,
Yeah.
Yes.
that even if you wanted to cut now, you wouldn't get yield that much?
Right. But he did recommend some pruning as far as making it so that the quality of the lumber that was growing there was not inhibited by brush and stuff like that.
That was 3 years ago we did that.
Was it that long
Was it that
ago?
long ago?
2018, I'm pretty sure.
Yeah. That was before the pandemic, huh?
Well before. So, yeah, there was no rush. It was just, like I said, the current markets triggered the thought process, that's all. Other than that, I'm not in any rush to get out there with my chainsaw.
Very good.
Yep.
Anybody have anything else?
No, I make a motion to adjourn.
At 9:45.
You got 15 minutes, Jack.
I know.
I'll second
Well-
that motion.
And anyway,
Okay, all in favor?
Aye.
We are adjourned. Thank you, Jack. Have a good day with your family.